Hi, I'm David Cook, Certified Financial Planner with Pure Financial Advisors, and this is your question of the week. What is a PE ratio? Price to earnings ratio. It is an economic metric that is used as somewhat of a comparable when evaluating a stock. And what the ratio is, it's the market value per share divided by the earnings per share. Now, some industries are going to have a higher PE ratio, such as the technology industry. And that's where you're going to see a little bit higher expected earnings in the future. Some industries like the utility sector are going to have a lower PE ratio. And it's really hard to compare a stock in the technology sector versus a utility stock because it's kind of comparing apples to oranges. Apple, for instance, has a 17.3 PE ratio right now, and so does Microsoft. Two stocks in the same industry. The utility sector is going to have about a 7 PE ratio currently right now. So you really can't compare the two, but again, it doesn't mean that either one is going to be better. It should probably be more inclusive in your portfolio. Now, when using the PE ratio, it's important to compare apples to apples. Again, you don't want to compare a technology stock to utility stock because they're going to have much different PE ratios for different reasons. A technology stock may not have a lot of earnings right now, but may have a lot of future growth. Facebook, for instance, has a PE ratio of approximately 75 right now, where a utility stock may have a PE ratio of 6 or 7, but it pays a high dividend, but not much growth in the future. So again, the PE ratio is not the whole story. There's other things that you need to consider, other metrics that you have to evaluate. And you have to know the difference of sectors and the PE ratios that go against. So is it overvalued against its peers, or is it undervalued against its peers? Warren Buffett is a big value investor. Guess what? He's probably looking for good discounts, and he looks at the PE ratio probably to find value. So again, when you're evaluating, PE ratio is a great place to start, but it's not the only thing that you need to look at. And that is your question of the week.